Fabricamos talento. Fabricamos innovación. Y, cómo no, sostenibilidad. Fabricamos una nueva economía. Y un mundo nuevo, en 3D, por supuesto. Pero sobre todo, fabricamos futuro. Y es que fabricamos empleo para más de 137.000 trabajadores. Fabricamos oportunidades globales de negocio en un espacio de más de 10 millones de metros cuadrados. Y fabricamos servicios de vanguardia y ventajas competitivas para más de 175 empresas. Consorcio de la Zona Franca. Fabricamos oportunidades para tu futuro.
Welcome to D-Factory, the factory that develops talent, technology, innovation, and of course in the heart of Barcelona. After all, D-Factory is consolidating Barcelona as a European capital of development for Industry 4.0, for digitalization, for transformation, creating 1,500 direct jobs and 5,000 indirect jobs in the city, close to the metro, the harbour and the airport. And promoted by the Consorcio de la Zona Franca de Barcelona.
It's a time of changes. Now is the time to move on. This is the time for solutions. Feel the motion. BNEW is born. BNEW none of you. Now I'm connected to you. BNEW none of you. BNEW will do it for you. This is the time for solutions. BNEW is for you.
Seguimos impulsando la nueva economía desde la Barcelona New Economy Week. Aquí hablamos de inversión, pero vamos a recordar que hay 7 sectores interconectados, como son el talento, la sostenibilidad, el real estate, la movilidad, el digital industry y, obviamente, este gran plató de Invest desde el D-Factory Barcelona, el nodo 4.0 de la industria 4.0 del sur de Europa. Bien, seguimos impulsando esta nueva economía, viendo dónde hay las oportunidades de hacer nuevas inversiones para nuestras empresas y vamos a repasar muy rápidamente, antes de hablar del segundo panel del día, de algunas cifras que ponen en valor la importancia de este BNEW. Por ejemplo, que a lo largo de esta semana pasarán más de 12.000 profesionales, 600 speakers, 130 sesiones y estas 180 horas de contenido también en este evento B2B híbrido, porque también nos podéis seguir en formato digital. Bien, segundo panel, hablamos de un panel trendy, como decía antes, del blockchain, el cripto y el tech. Y por ello contamos con 3 gurús en la materia. Muy buenos días a todos. Muchas gracias por acompañarnos. Yo creo que será muy importante, ¿no?, hablar de ejemplos como el blockchain, este gran libro compartido, inmutable, que no se puede en ningún caso nunca tocar, y hace un registro de transacciones, pero veremos también los elementos de seguridad que lleva en sí. Este panel estará moderado por el señor James Bernard. Good morning, Mr. James. He's a business leader with a successful track record, an extensive network of global connections, and a strong determination to success in competitive market. James, thank you to join us today.
Thank you.
Thank you.
Good morning, everyone. Thanks for joining us. And today we're here to talk about Web3. As you've heard, blockchain, cryptocurrencies, non-fungible tokens, tokenization, metaverse, decentralized finance, and it goes on. And everyone's probably heard about all these terminologies, these words, but what do they mean? How can we invest? Should we invest? And I think today we're here to answer some of those questions for you. So maybe we can start with Richard. So where are we in the crypto journey so far? Can you give us some perspective on how big that global crypto market is? And and what it all means in terms of crypto tokens and investment for us all.
Thank you, James. Nice to be here. So yes, I would like to start out back to 2008 of the last financial crisis. So clearly some people made a little bit of a mess of that. So hence the birth of crypto. So I think there are 3 phases that you can analyze here. And I think we're on the 3rd phase. But before I talk about those 3rd phases, I want to talk about a topic called inflation, because that's now on everybody's mind. So I have here with me a marble coaster made by an English company. And on this coaster, you will see an old Rolling Stones concert ticket. And this was from 1976, and the Stones were performing in the city of Leicester. And if you, for the viewers at home and the people here, the ticket admission was £3, including VAT, it says. So in 1976, it cost £3 to see the Rolling Stones. I looked it up. Last summer, they were touring, and they were at the Liverpool Stadium in Liverpool. And then the cheapest ticket cost £220. So talking about inflation, it's still the same 4 or 5 guys. They still play the same songs from 1967. And back in the day, it was £3, and now it's 220. And if we look at spending power, the record of financial spending power goes back to the year 1751. And if you had £3 in the year 1751, 200 years later, in 1951, you needed £4.24 to spend the same power of the £3, meaning inflation in 200 years was not that much. But from 1976, the £3 of the Stones, to you need now £24 to have the same spending power in the year 2022. So in this case, £24, but the Rolling Stones still cost 10 times as much. So clearly with the Stones, the inflation is more than 7,000%. So this gives a perspective of how expensive life is going to be. And if you're an investor, you want to beat the inflation. And up to recently, most people didn't care too much, but now people start to pay very much attention. So back to the crypto, we have 3 phases. So 1st phase, 2nd phase, 3rd phase. 1st phase was the Big Bang, the birth of Bitcoin. And the 2nd phase is an alternative to Bitcoin. You all have heard the word altcoins. That stands for alternative to Bitcoin, which means every other coin but Bitcoin. And I do not exactly know the level of people of understanding of crypto, let's say, who are watching us on the live stream, but I would say the deafening sound of the Bitcoin birth, the Big Bang, was Bitcoin, and in our galaxy, that's the sun. Ethereum is the 2nd biggest crypto, which is the moon. And all the other altcoins are circling around the sun in the hopes that they will be the moon one day. So 1st phase was the birth of Bitcoin. 2nd phase is the creation of altcoins. And the 3rd phase, I think we are only in since 2020, the mass adoption also of companies to use the blockchain in their normal way of business. Mm-hmm. This is where we are.
And some of those shooting stars getting burnt off every now and then, I guess.
That's right.
Like happened in the .com as well. It's a very similar sort of birth pattern. So roughly there are about 14,000 crypto tokens, if you like. And for people who don't know what cryptocurrencies are, crypto tokens, it's quite confusing because cryptocurrencies are often referred to as crypto tokens, and they really represent either the underlying value of whatever that is, a technology, or pretty much nothing behind it. It's very difficult for people to invest if they don't know these terminologies. But what, in your terminology, what do they represent? And do they all have a future? How do we distinguish between them?
Yes, well, when I did my research in preparation for this meeting, most people have heard of CoinGecko. That's an app and a website, and they keep track of almost every coin that is out there. And when I prepared 2 weeks ago for this meeting today, there were more than 14,000 different crypto coins. But when I checked last night, there was down to 13,195 or so. So in the span of 2 weeks, 800 coins have disappeared. So some of my crypto gurus or influencers, people I like to listen to who have an interesting opinion, they think that maybe only 1 or 2% will survive, you know, have a sustainable future. So the question is, 2% of 14,000 is still about 400 to 600 coins who have some future. So for an investor, it's all about which ones to pick.
Yeah. John Paul, do you have anything to add on that?
Well, I mean, very similarly to what happened in the in 99, 2000 during the internet bubble, we saw similar things happen in the stock market. So there were so many tech companies coming out at the time, and then the crash came, and only a few survived. And those few who survived are still around today, and they are big multinationals right now. So it's a very similar phenomenon as was Richard explaining.
Yeah. I know that it represents a sort of good opportunity, but also a lot of volatility in the markets. And I know we were talking before about various companies that were the first movers back in the .com. And if you look at sort of the Amazons and the eBays and the rest of them, they were very volatile at the beginning. So there's no one should be surprised that that's the case now with crypto assets. So Ross, would you care to comment on that at all?
Sure. I mean, I come more from the private markets investment side, so really, focusing on family offices and adoption really at institutional level. I think that's really changed a lot over the last, I'd say, 3 or 4 years, from kind of an industry where mass adoption was not on the table. I think it's been seen as a threat to central banks and governments. I think it's a clear alternative nowadays to let's say the financial monetary system that currently exists. Unfortunately, I guess it's being taken more seriously now. There is a real space here for adoption.
Yeah. Not
just of crypto, but the blockchain technology around it as well, and the businesses that can support it. And I think that applies to all walks of life, right? I mean, I focus on a lot of agri-tech deals, biotech deals.
On that note, if I may interrupt, I'd like you to sort of say a little bit about what you do, what your business is, how you're involved in this, what markets you're focused on in Web3, jumping around a little bit.
Sure.
We thought it would be the best way to introduce everyone to get them into sort of the pattern of talk. So if you could just give us a bit of a background and where you are now.
Sure. So my focus really is in private markets. I've been servicing a number of family offices and multi-family offices as well from an advisory standpoint. And also, I guess, historically, capital raising. My original background is in headhunting, so I started off my career in the city in London, focusing on private banking, asset management. So I've really seen that kind of transition from the institutional side now into crypto and blockchain. So what I see now, what I focus on a lot is cybersecurity, tokenization, data encryption as well, NFTs as well, the NFT platforms in terms of collections, but also distribution. So yeah, I think there's a lot of momentum in this space. I think there's a lot of interest in this space, but I also think that there's a lack of knowledge. And I think that that's really what needs to change here. What needs to change is more the knowledge base, to improve the knowledge base in order for the right adoption. And then I think also, I just think it will be beneficial for everyone, right? But that will take some time, and I think that there's still a bit of apprehension. And it's seen as as I said, it's seen as a real threat to potentially to governments and central banking authorities that we've always been used to. Yeah. From a fiscal standpoint. Mm-hmm. But there needs to be an alternative. Richard started off the conversation discussing 2008 and the financial crisis. I think we can all agree that we're potentially heading into similar headwinds now in terms of markets. So, there needs to be an alternative, especially when a system potentially is challenged or, could be perceived as being broken. Then you have to, after destruction comes reconstruction, right? You have to create again.
Yeah, no, great. And Jean-Paul, similar sort of question, if you tell us a little bit about your background, which is very relevant, but also from an investor standpoint, how is the transition for investors from what we have as a sort of traditional business to a more digital assets business, which is quite difficult for people to understand, maybe a bit less regulated, and the whole decentralization part of it is quite difficult for some companies to be able to, eat up.
That's right. Well, I'll start with the first part of the question. So my background, of course, is finance. I was in the Silicon Valley back in the days of the internet boom. That's why I was mentioning that example. That was many, many years ago. And I'm seeing the same cycle happening all over again. So it was the internet back then. It caused profound changes in businesses. The businesses that were not able to adapt simply died out. And the same is going to happen now if businesses don't adapt to this Web3 revolution, which is basically tokenization and blockchain. What we do at Decafor is we basically help companies understand that and transit from a Web2 to Web3 business model, whether that is through different forms of tokenization. So you have security tokens that represent financial securities, a token that represents a real financial security, or you have other types of tokens such as utility tokens, community tokens, and NFTs. There are different variants of that. All of them need to follow, of course, business fundamentals. There needs to be a real business behind it, but these are the different variants that companies need to be adapting to. And there's a cycle right now of companies trying to understand that, not just companies, even banks, institutions, governments are trying to understand how they can adapt and embrace this, because if they didn't embrace, those who didn't embrace the internet disappeared. We don't want to repeat that.
Mm-hmm. And for the people watching, individual investors, what's the sort of route to market? What would be your advice to some of these people? Because we're always talking about traditional big businesses and them investing, but people that want to invest, don't give any financial advice, but maybe some ideas on, sort of what they should be looking out for. I mentioned there's decentralized finance, there's NFT, there's metaverse. How do you invest in some of these things?
So all of them have a basic fundamental. There has to be a real business idea, a business opportunity behind it, and you need to also believe in the idea that it's promoting. So whether it is sustainability, renewable energy, different kinds of applications of the world of finance, for example. Nowadays, certain apps or exchanges are providing people with a debit card, a way to send and receive, crypto or fiat currencies. They're even providing loans. So basically, they're replacing what an individual needs for a bank. So if banks don't adapt to that, at least in the retail point of view, if they don't adapt to that, they might actually disappear. People won't have a need for them. Yep. So there is that whole process of adaptation. And what I can recommend to people, of course, if they're interested in looking into this field, is always look at the business fundamentals.
Right. And Richard, looking at the banking, talking about banks, what is the appetite for them? Are they able to invest in crypto assets? What type of crypto assets is the appetite? We talk about amount of money coming in. There's old money, there's new money, there's money lost. But where are the banks in all of this?
Well, I think you allure a little bit even more of how big is the crypto world. So if I give a bit of statistics there. So for instance, the total market cap of all the stocks exchange, of all the companies together were publicly listed, that's about 105 trillion. And then the bonds industry is $130 trillion. And then to give another perspective, the company Apple, which is probably worth the most at the time, I checked last night, that's $2.3 trillion, just one company. And the total market cap for crypto is now $1 billion. So last year at the heyday, or the year before, it was 2.3 trillion. So some money has gone out of crypto. So back to the banks, we're talking here to investors who do family offices and other maybe rich individuals who are in charge of their own bank account. They have more an appetite for a little bit more risky exposure, because let's be clear, crypto can be very rewarding, but it is volatile, and hence that holds us a little bit back. Almost every Wall Street bank you have heard of, they all have written white papers, publicly available on the internet for everybody to read. So they are all very keen to get into the business. But since they have their buy rules that they cannot always do what they really want, in this case the cryptos, they are held back, as I understand it, that they do not fully feel secure to invest in cryptos. And the moment they start doing that, if only, let's say, 1 trillion out of the bond industry comes to crypto, or even 2 trillion, yeah, there you have your growth back. So, and I think the big banks are waiting for regulations. So if that's one of your follow-up questions, what about governmental regulations? Well, that's a tough one. So the ideology of crypto is to be free, to be set free from the financial system, but we cannot fully do that. And we probably do need some regulation so that we don't have another collapse like with, help me Ross, the South Korean coin, the Luna, which of course
Luna, yeah,
is not good for business. And some American judge in New York has said to one of the stable coins, they have to show how it's backed up, the stable coin. Well, maybe they also should ask the Federal Reserve or the European Bank, how do you support the money that used to be the gold standard? So we need certainly some regulation, because you do want to see that the stable coin is backed up by something in cash or something worthwhile. So I think we do need regulation, but the question is to fine-tune it to have it exactly right. And that's why it's okay that many crypto coins in the end will, like you said, will go bankrupt, because we live in a time of enormous innovation and an enormous disruption. But that's maybe a forum for another day.
I actually, thanks for that. I did have a question in terms of sort of, is the world on the same page? And that really relates to regulation, because different countries are at different stages with regulation. Dubai, where I'm based, we're quite far in our process of becoming regulated and having regulation for digital assets. There are others who have tried and failed, others who are somewhere there, but as my understanding is, you do need some type of regulations, but obviously there needs to be that maintenance of decentralization of it all. Jean-Paul, do you...
Well, absolutely.
Also on that point of investment of the banks, if you could refer to that as well, because I know you have some shrewd methods of and some inside information on that as well.
Absolutely. So basically, in terms of regulation, of course, we've been following very closely for the last 5 years how some countries have actually done a pretty good job at trying to come to that balance that Richard was expressing. We actually set up a digital asset fund that is now listed in the Swiss Stock Exchange, and I have to commend the Swiss for being very forward thinking on the way that they've modified the regulation to adapt to this digital asset world. And this listed fund allows institutions who have a specific mandate and may not invest maybe directly into crypto to enter this field, or at least dip their toes into it, to enter this field in the proper regulated manner. So definitely this convergence between the traditional finance, the regulation, and the crypto world is slowly coming together right now.
Yeah. And in terms of the regulation, do you think that we hear of these collapses in certain tokens which represent decentralized finance and other things, but are the regulators there to have a proper case against them, or are they lacking in the regulatory environment to be able to do that?
Well, it took many, many years to regulate what we see today as the free flow of information on the internet. So we should not expect that to be overnight also in the world of blockchain. Where you're talking about privacy, where you're talking about anti-fraud, all that sort of thing. It took over a decade for all countries to really come to some consensus. So we should expect the same in the blockchain world.
Right. Yeah.
I think the same. I'll just add to JP's point. The same adoption in terms of from a regulatory standpoint, if you have countries like Switzerland that have Crypto Valley and Zug, Dubai, you have the free zone. They're generally economies that have a smaller population, so they're much more easy to regulate and adapt. I think that you also see emerging economies, like we saw the case with Salvador, right? Younger president trying to do mass adoption of crypto on a wide scale. So I think there's a real opportunity there, and also if you look at Africa as well, right? In Africa with, if you will, the telephone side of things, the mobile side of things, in terms of apps, in terms of how resources as well, and how you can kind of combine all of those aspects. I think present a real opportunity. So not just developed world, but also developing world as well.
No, understood. And as we go through the sort of list of potential, if you like, industry sectors of digital assets, because you have NFTs, pretty much all started with tokenization of everything, which is still sort of on the books for most of the industry. That's still going, but in between we sort of then created non-fungible tokens, which were not creating exactly the same assets. So where are we with that? I mean, a lot of people would have heard about apes and pretty pictures and stuff, but what's behind those? What is it that's behind that? Is there a utility value? Are we going to see a big change? There's been a lot of money that's lost through the system, but how can we educate everyone to know what to invest in and the next stage of tokenization, digitization of everything?
Well, the concept of the NFT is very interesting. If we try to summarize it, it would be that it's the ability to create a legal contract of ownership of something, that could be anything, represented into a token, and allowing that token to be traded and transferred from one person to another. It's a quite revolutionary concept. It's now we are, presently as the CAFOR, been working on tokenization of real estate, we're working on tokenization of various types of physical and financial assets, but also non-financial assets, even memorabilia, for sports or whatever else. And these have real value to many people. And I'll give a very simple example of the concept of fractional ownership that comes with the NFTs. And that is, today, if you own a painting that belongs to a famous artist, and that painting is worth $1 million. You're the owner, you're the only owner, you're retaining that value on that painting, and it appreciates over time, maybe faster or slower than inflation, but it appreciates over time. Now, with fractional ownership, you allow 1,000 people or 100,000 people to own a little piece of that famous painting, and they would not be able to spend $1 million, but they will be able to spend maybe 1,000 euros and maintain the value of that 1,000 euros, if not increase it in value over time. So it's a store of value. But you're doing a democratization of investment. You're allowing even people with only 1,000 euros to save to be able to participate in this cycle and being able to save or make money from that. So this is the revolution, really. It's the access to everybody to being able to either store value or make some money in the process. And
that can be gold or houses or a painting, as you said. Yeah. But I suppose the real sort of value in that is the utility, is the thing behind the actual asset. So either earning a revenue of interest or just the value of appreciation. Yeah. No, that's great. So how do you balance client exposure? I mean, it's a question to everyone. With crypto assets, I mean, you're actually involved with family offices, not the first people you would think of investing in crypto. So I've heard more and more that they are getting involved. And so how do you balance that, the sort of exposure? How do they value that exposure?
I think with family offices, it's fairly straightforward in terms of you have traditional money and new money, right? So I think the new money could come or could be derived from Web 3.0. It could be derived from, if you will, the new crypto millionaires and billionaires, plus the tech investors as well, right? So for them, let's say the adoption is clear and the investment strategy is clear. I think that there's more of an education required on the traditional family office side. And I think that traditional family offices are typically more conservative in their approach. They like bricks and mortar, they like real estate. They like tangible investments, tangible assets. And if you look at the crypto play, it's quite intangible, right? I mean, like how can you place a value? And you saw obviously with the market turn in May, and let's call it crypto winter, how it can change so quickly. So I think there's a real education required, but I think now more than ever there's more of an appetite for adoption in terms of diversifying investments into crypto, into blockchain-related activities as well. Yeah. And blockchain really transcends into, if you look at the climate crisis, right? Agri-tech projects are really important as well. This is our future. This is the planet, right? Biotech, the medical side as well. So you can really apply everything to it. So I think traditional investors are kind of looking at both options right now. ESG type projects, but also the kind of crypto or the blockchain angles in terms of returns and where they can generate returns.
And how do they assess these assets? This investment, because when it all started many years ago, I was used to investing, and people were used to investing on white papers, one blank,
or stocks and shares as well. Yeah.
One sheet of paper that promised something was going to happen in a tech capability behind the actual crypto token, as it were. If you look at Ethereum, you're not buying Ethereum for the value of the token, more the underlying asset of what's happening with their technology and everything else that we study. Bitcoin's slightly different, and there's 16,000, 14,000 other tokens, which some have nothing behind and some have a lot behind. What do they ask you in terms of paperwork, in terms of history? Is it very different from traditional investment?
Well, they're still trying to work out who Satoshi is. What do they ask? They're still trying to learn, right? They need to understand the fundamentals. It's very difficult because for a traditional investor, they look at fundamentals when they're investing. Mm-hmm. And how do you analyze the fundamentals behind blockchain technology or cryptocurrency? It's very difficult to measure.
Very much like .com, I guess, at the beginning.
Much like the .com in the beginning, absolutely. The same phenomenon that we're seeing right now.
Yeah, and you must have it with investors yourself as well. The digital investors, the crypto investors are very different from the traditional investors. They take more risk. But now there's a crossover with the traditional investors. Obviously, there has to be some give. And I think that's where we'll see regulation coming in and offering a hand to at least people will know there is some sort of recourse if things go wrong. So, cybersecurity, we touched a little bit on security. I know, Ross, you're involved with one company that's working on various aspects of it. But what keeps our funds safe? Normally, we invest in stocks and shares. We know that's safe. We know it's regulated. We know that the worst that can happen, I guess, is it goes to zero. But we're pretty sure it's not going to go to zero. With this, it's much less of a guarantee, I'd say. And if there is that anything goes wrong, what's the accountability and who's accountable? Where are we in that?
I think it's about holding the keys, right? I
can start on that one. I would say that the vast majority of theft in crypto is because people make mistakes rather than the systems being unsafe. It's people giving up their keys or clicking on the wrong link or listening to a scammer who passes on to be someone else. That's the biggest risk. It's not so much the fact that the systems or the exchanges may be unsafe. They're not. The actual real hacking events are literally, you can count them on your fingers. Mm-hmm. The majority of theft is really just people believing or clicking or doing something wrong.
Yeah.
Like online banking as well.
Like online banking.
Yeah. Yep. At the beginning, especially.
You were talking about cybersecurity, and in terms of this company, I guess in Silicon Valley, it's data encryption. So it's end-to-end data encryption, and I think that's key as well, right? I mean, how can you prevent a hacker potentially from breaking into a system? So you need very sophisticated end-to-end data encryption. And you need to apply that to not just messaging, I guess, emails or if it's WhatsApp messages or, you need to apply it across the board. And I think that for crypto, it's very important also as well. But the mass adoption, the part of mass adoption needs to be linked to security. Yeah. If people feel safe, it's like what we were talking about with the tangible assets. It becomes more tangible the safer it's perceived. It might be very volatile, but at least it's a safer asset to invest in.
Yeah. I think there's also, sorry, Richard, you can.
Yeah, I'd like to add, let's say we talked about what is the hazard for a normal banking if your account get hacked. It's the same thing we talked about regulation a moment ago. For instance, some of the exchanges where you buy your coins and keep your coins at the exchange site, some, for instance, of the Dutch sites are under supervision of the Dutch National Bank. So I would say that's a good thing. Mm-hmm. And also there, they guarantee, I believe, up to €100,000. So it's no different from your normal Dutch bank got hacked. So also here it's safe. Only when you have bigger amounts of crypto, well, then we talk about different kind of security. Well, you made the phrase, not your keys and not your crypto. One of the Dutch sites says, not your keys, not your worry. So they already, bring that back. So that's almost, I will not say luxury problem, but we were in a different kind of ball game. And then maybe some of the security measure could be, if it's a relatively small money and you're people like you and me, and we're a retail investor, then it's probably safe enough to have it at an exchange. And otherwise, yeah, you bring it to your hardware wallet. So for people who don't know, sort of like a USB stick, but you are solely responsible. So if you lose your stick, it is gone. So that is then exactly what you said, your keys, your responsibility.
I think there's that sort of balance between off-exchange, on-exchange, decentralized, centralized. You give up some protection if you're going totally decentralized. But at the same time, I mean, if you look back at all the other types of, as you mentioned, the internet, banking, everything, there is a huge amount of hacking. It's not focused purely on crypto, but obviously PR is like purely focused on crypto. So is it a good time to invest in Web3 and digital assets? What types of investment are available to people and corporates? And sort of what are some of the more accessible ways of doing this? Is there anything new? Jean-Paul, obviously you alluded to you having something new for those that are under different regulations globally.
That's right. So obviously, individuals can go online and invest and take their own risks. But the idea of setting up funds is that either regulated investors or institutional investors who just don't have a mandate to do that, or people that just don't feel like they want to get involved by themselves or take risks, actually would place money into these funds, and the fund manages a vast portfolio of things, mitigating the risk with different kinds of projects. And then you were mentioning also the criteria for investment. Now, it's been now roughly 5 years. Things have progressed a little bit. Now, there is a certain level of criteria for certain projects. Of course, we were mentioning the ones that go belly up, because they may not have anything behind them. But if you look at, for example, the size of the existing community, this is extremely critical because it relates to adoption. So if a specific token, whether it's a community token or a utility token, has adoption, it has a lower risk of failure. So if it has a big community, this is number one. Who is the team managing? Do they have experience? Are they professionals doing the job? What are the business fundamentals behind it? Is there a real business model, or is it something that doesn't make sense? Because it has to have certain fundamentals. If you look at, there's a long list of criteria now that are slowly being developed. Yes, we're still figuring out some of them, but there's already something there, and we are in that progression. And I would say that we are, a little bit like the first 5 years of the internet boom. We're about there as well. So it is still an evolution. There's still huge opportunities. The crypto market or the blockchain field is still very small. It's still at its infancy right now. So there are still amazing opportunities for investors, and definitely it is the way forward. It is the way of the future. Yeah,
it's very much at the moment the teams behind things as well, isn't it? The people the people who you've seen develop other projects. But right. For yourself, I mean, what projects are you looking at? Not names, but across what sort of sectors of the crypto asset? So aside from the security tokens, who are basically tokens that represent financial assets, so we're based on the current system. Aside from that, the utility tokens, community tokens, and NFTs that we're looking at are in the fields of entertainment, for example. There is a huge potential there, only because of the interaction with people. Sports, huge interaction there. Anything related to sustainability, people really believe in that, whether it is sustainability by itself or logistics, energy, that sort of thing. Projects that relate to, embetterment of life. So whether it is medical services or, that sort of thing. Yeah, there are certain sectors that are really going to pick up in the future. And some of those that you mentioned obviously are serviced by the decentralization of what's behind it. That's right. So, and the utility that's behind these processes, so that people are automatically paid. And for artists and sports stars, obviously that's a big benefit.
Absolutely.
And of course, they build huge communities, which are then easy to access. So, Ross, do you want to comment on that at all in terms of what you focus on?
Sure. I mean, obviously I talked about data encryption, but also on the NFT side, NFT collection platforms and distribution platforms as well. Interestingly, we were talking about the insurance aspects of crypto. And actually one of the exchanges that I work with in Dubai are focusing on the insurance aspect as well. So yeah, I mean, look, there's a number of different projects. Obviously, I can't name them here, but
there's a whole raft of new terminologies coming, DeFi, refi.
Yeah, and there's a real hub of innovation. I mean, you know, you're based in Dubai, and at Dubai you have the International Finance Center, you have the Dubai Multi-Commodities Center, as you know, but you also have the Innovation Hub. Mm-hmm. So I think the future really lies in great minds, you know, coming together, great projects and creativity coming together. And innovation is what will drive the change going forward and the mass adoption.
Yep.
But you need to be mindful of kind of regulation, and you need to be mindful of this. I feel like we're in between two systems. That's really alluding to a lot of what JP mentioned and what Richard mentioned as well.
No, that's great. Thanks for that, Ross. Richard, we're just wrapping up, so would you like to...
Well, to add a little bit to the NFT. So we're in the city of Barcelona. And the FC Barcelona, the football team, was touring the States pre-season. And they took the time to launch the first NFT. And I just looked it up. So it's the famous, almost bicycle kick of the famous Johan Cruyff, now in gold. And that was auctioned off by Sotheby's for almost $700,000. And I would say lots of people who are not so interested in crypto do understand NFTs. So it's in a world of its own. You maybe do not need to understand how exactly blockchain works in order to invest in NFTs. And let's say the younger generation is used to buying in the FIFA football game some skins or some extra players, or a game like Fortnite. So the younger generation is already more used to that, to the tokenization of society.
That's great. Well, thank you very much. Thanks for being part of the panel today, and
thank you.
Thanks to the audience. I hope everyone enjoyed it.
Thank you, our experts. Sí, podéis aplaudir for this panel. Va bien escuchar estos aplausos porque confirman el éxito de este panel Invest con la presencialidad, pero también en formato digital, porque me dicen que hemos tenido un récord de visitas en el canal Invest desde que empezamos el lunes, así que muchísimas gracias. Yo me quedaría con algunos conceptos, ¿no?, que nos sitúan en estas amenazas inmediatas, ¿no?, que es la volatilidad, la inflación y las famosas burbujas, que igual que tenemos burbujas inmobiliarias, pues también hay digitales. Para terminar, una pregunta abierta a vosotros. Dentro de la Web 3.0, ¿qué tipo de empresa e industria podría ser la primera que liderase este cambio? No sé, tú mismo. Okay. Sorry.
Within the Web 3.0, I'm just thinking we should...
Vale. No, es que hemos hablado antes y los tres viven en Barcelona, entonces pensaba que, si no, en inglés. It's not problem.
No, they're asking that which type of company would lead the drive going forward within Web 3.0 in your view? Like what's required out there in the market right now?
John Paul's probably the best person.
Okay.
Well, most probably that would be led by the entertainment industry. They simply because of the way that they interact with people, the concept of the metaverse, which is a big part of the Web3 innovation. There's a lot to do with the entertainment industry or the sports industry as well, which is related to entertainment. So those are the type of companies that would probably lead that sector first.
Perfect. I'm sorry.
Yo hubiera tirado más hacia el tema de sostenibilidad.
Okay.
Pero bueno, es que
duality, it's good, no?
I think I was saying it would be more sustainability focus as well. It depends how you look at it. Entertainment, of course, yes, and sports, but I think also sustainability and ESG play, right? Environmental, social governance is at the top of the agenda right now.
And of course, the technology companies behind it all, you know, the Ethereums, the Solanas, the blockchain itself, the distributed ledger technologies, you know, how they are advanced. We have a lot of, I'd say, issues, some of the bigger issues between layer 1 and layer 2, you know, bridges, that's where there's vulnerability. So I think the biggest sort of jump in this technology is going to be from the technology companies themselves.
Yes, technology companies. And sustainability, it's a really strong, and not it's the future, it's immediately the present, no? Apply this kind of industry. Well, thank you so much, disponents, James Bernard, founder of GBL. Nosotros ahora hacemos una breve pausa. Seguimos diciendo que muchísimas gracias por este récord en el canal Investment. Tenemos 7 canales abiertos a través del BNEW desde este D-Factory de Barcelona, pero estamos muy contentos también nosotros pues, de ponernos esta medalla. Volvemos en 5 minutos desde el D-Factory, de la mano del Consorci de la Zona Franca de Barcelona, al lado de esta nueva economía. Sorry.
Fabricamos talento, fabricamos innovación y, cómo no, sostenibilidad. Fabricamos una nueva economía y un mundo nuevo, en 3D, por supuesto. Pero sobre todo, fabricamos futuro. Y es que fabricamos empleo para más de 137.000 trabajadores. Fabricamos oportunidades globales de negocio en un espacio de más de 10 millones de metros cuadrados. Y fabricamos servicios de vanguardia y ventajas competitivas para más de 175 empresas. Consorci de la Zona Franca. Fabricamos oportunidades para tu futuro.
Welcome to D-Factory, the factory that develops talent, technology, innovation, and of course in the heart of Barcelona. After all, D-Factory is consolidating Barcelona as a European capital of development for Industry 4.0, for digitalization, for transformation, creating 1,500 direct jobs and 5,000 indirect jobs in the city, close to the metro, the harbour and the airport. And promoted by the Consorci de la Zona Franca de Barcelona.